Welcome to Frank Wealth Insights, a financial and investment podcast from Return on Life Wealth Partners. They look at your money. We look at your life at returnonlifewealth.com.
Happy holidays, everyone. I'm Frank Fantozzi, the president and founder of Return on Life Wealth Partners. I hope everyone had a wonderful Thanksgiving filled with great food, good company, and plenty of reasons to be grateful. As we wrap up the year and dive into the holiday season, I'm thrilled to welcome you to this last episode of Frank Wealth Insights for 2024. Time has certainly flown by this year. So today we're exploring commercial banking, do's and don'ts. What do you need to think about when you enter into a relationship with a commercial bank? And to help us unpack this important topic, I'm grateful to be joined by special guest Carrie Malotte, Vice President of Commercial Banking at Westfield Bank. And I know Westfield Bank's a great bank. I do a lot of work with them personally as well as referring our clients to them. And I thought it was very helpful that Carrie was going to invest some time today and show us, or talk to us, not show us, as we're on a podcast, things that we need to be thinking about as a client of a bank and how you enter into a relationship with a bank, do's and don'ts, some trends in banking, and really how to make it, most importantly, a successful relationship so both sides, the bank and you as the client, win. So are we ready to kick it off, Carrie?
We sure are. Thank you so much, Frank, and Thank you for having me on the podcast. We love working with you as well, and we're grateful for the partnership.
Thank you.
That we enjoy with you. And you are absolutely right. This year is certainly flying by very fast.
Oh yeah, more than I care to be. Every year, it's like. Someone told me this is maybe not appropriate, but someone described life as a roll of toilet paper. As you start to use it, as you get to the middle, it kind of uses it up a lot faster and faster.
It does seem like that.
So why don't you first tell us a little bit about Westfield Bank and your position in the community and things that you're doing, and then we could dive into whatever topics we want to talk about today.
Yeah, that sounds great. So Westfield Bank is a community bank. We are located in Medina County. And we're a little unique in the fact that we are fairly young. We got our start in the late 90s, early 2000s, when there were some regulatory changes when it comes to insurance companies. So when people hear the name Westfield, they often think of Westfield Insurance, who is our only shareholder as well. So if you've ever been to a Cavs game, you see the Westfield Champions Club.
Yep.
That's how people will typically remember us. But
and the golf course too.
And the golf course, yeah. The insurance company certainly has all of the really nice things, but we definitely get to enjoy them when we have the opportunity to do so. But the insurance company, for a lot of really good reasons, decided to start a bank, and Westfield Bank was born. We have organically grown over the last 24-ish years with a few strategic acquisitions along the way, and we're about $2.2 billion in asset size right now.
Wow, that's impressive. That's impressive given the young history. So
yeah, it really is.
Congratulations to you and your team.
Yeah, thank you.
So why don't we start at a high level? Why is it important for, especially business owners, but individuals as well, to have a relationship with a bank and how to make that relationship successful?
Yeah, that's a really good question. And it's one of the things that we talk about with our own customers and prospects when we're having conversations with them as well. And if you're a business owner, regardless of size, you've probably at some point in the lifespan of your business experienced how important it is to have a really good relationship with your bank. And that can mean a lot of things to a lot of different people. So it's not a one size fits all. And you really have to examine and evaluate what's most important to you, as a business. Some businesses don't really need a lot from their bank, except a place to put their money. They're not borrowing a lot, and so they don't really have a lot of needs. And that relationship maybe with a commercial lender like myself or anybody else at another financial institution maybe isn't quite as important, but having tools like remote deposit or online banking and things like that, those might be a little bit more important to a business owner like that.
Yeah, so mostly like treasury type functions.
Yeah. And then you have other businesses where that relationship with a commercial lender can be really, really important, especially when you're looking to borrow money. So businesses that might be capital intensive, or have various needs to support their business through lending, commercial real estate, developers or investment companies that are out buying investment real estate. that relationship is really important because their banker then is their advocate. They make that pathway and access to gaining lending resources to help them grow and sustain a lot easier when you have the right partner, available to you.
Yeah, for sure. I mean, as a business owner, if you reach your own capacity to basically self-finance out of your own current cash flow of a business, or borrow from family and friends, you really have two options. You could either take on business partners,
right,
but then you're diluting your ownership interest, which is one type of risk.
Yep.
Or you take the risk of working with a bank and saying, listen, if I could basically tell my story to the bank, and I'll let you allude to more of what that story needs to look like, but when I tell my story to the bank and say, listen, I'm asking you to lend me money for this reasons, and these are good reasons why you should lend me this money, then you can take that money, and there's a cost to that money,
right,
but take that money and put it into your business so you can generate an ROI on that money and then pay back the loan with you being able to continue your growth pattern.
Yeah, that's very true. And two, depending on the life cycle of your business, all of those access to capital, all those ways to get access to capital can be important. Sometimes based on your life cycle, you need your family and friends to be supporting you. There may be other resources that you have to evaluate and look to help you grow sometimes in the early stages or in, very accelerated growth. And then depending on where you're at when you're talking to a bank, to your point, you're telling me why you need the money and you're giving me background about your business. Or if we've worked together for a long time,
right,
I know your story and, I know why you need the money when you come to me because I've been on that journey with you.
Right.
And so, the importance of what I do is I take that and I help translate that to a group of people who are really evaluating you based on numbers that
right,
they're looking at. So, really humanizing the deal. And, one of the things, it's super important. And one of the things I like to tell people when I talk to them about the importance of having a good partner in a bank is, the difference between a good lender and a great lender is their ability to tell your story and be your advocate.
Oh, that's awesome. Well, so you bring up a good point, this whole part of life cycle. Obviously, businesses that are very well established and are trying to continue to grow, I imagine the story is a little easier because there's a track record. You can look at financials going back, 3, 5, 10, 15 years.
Mm-hmm.
They're usually established in the community or the region. So how do you help? This is where it's kind of like getting a job out of college. Oh, I need a job. I'm really talented, but you don't have any experience. So there's this, tug of war going on with employers and recent graduates. Maybe not today because I think we're still looking for a lot of talent, everyone.
Mm-hmm.
But when you have a business that's starting out and they don't have enough family and friends and they need some money to get things going. They have an operation, it's a going concern, but it hasn't been around long. How do you help with them? Is it things like the SBA loan or other ways that you help talk to the loan committee and say, listen, this person's got a lot of character, a lot of credibility. They have credibility before they started their this journey with this new operation because they left being an employee and now they become self-employed,
right,
or have a small operation. So how do you help them in these earlier journeys?
Yeah, that's a really great question. And there are a couple of different ways that business owners can look to try to get the funding that they need for that. And so to your point, maybe you don't have a lot of family and friends that you can go to, but there are resources, and you hit on one of them, like the SBA, the Small Business Administration,
Okay.
Does have programs out there to help businesses get started. And I think it's important for the people that are listening to understand that, each bank has a different appetite when it comes to that type of lending. Startup businesses are the most risky. And specifically, various industries within startups have various levels of risk associated to them.
Right.
And so each bank has their own appetite within whether or not they do startup lending, even utilizing the SBA, and then further into that, what industries they might have a tolerance for also working within there. So it's important to create relationships and know various people that are out there, either with the resources, or someone like myself. I can probably tell you on a high level whether or not Westfield Bank would have an interest in a particular type of opportunity, whether it be a startup or someone that's, in the early innings, a year or two in, has a little bit beyond that. But so the SBA is a great resource. The reason why banks like SBA is because in a lot of instances, they don't have the historical. So, you're trying to mitigate some of the risk that could come with having a young business. There's usually some sort of collateral shortfall, and so the SBA can help mitigate and help the bank get comfortable with risk around that.
Is that because the government signs on for some of the liability?
Yeah, absolutely. So on there are a couple of different types of lending, and we could probably spend an entire podcast just talking about that, but for, just to keep it simple, in a 7A loan, which is what a lot of businesses use to acquire another business or to start a business, the SBA will guarantee 75% of that. So the bank's only on the hook for 25% of that in the event that something were to happen, as long as they follow all the rules and all that fun stuff. So it does help the bank get a little bit more comfortable with the increased risk that comes along with that. The other thing to think about, as you're going on, if you're young in your journey, but even as you're further on in your journey, there are a lot of really great resources just within the state of Ohio. A lot of the economic development, people within the cities, within the counties, and within the states.
Like Jumpstart,
yep. Different organizations like that are out there and available for either helping you get access to funding, helping you look at the business and help decide what that next path might be.
Right.
But there are additional resources that are out there, and it's always really important when you're looking to grow or acquire a business to have conversations with your local and regional economic development people.
Yeah, that's great advice. I know one of the things we talk to clients when they start asking us for introductions to banks is like we start asking them, at a high level, what's the money for, right?
Right.
I know generally speaking, you can comment in more detail, but banks don't usually like to fund operations because there's usually a lack of ROI in that sense, except for if you're in a seasonal business, they know they have to, kind of what I call levelize the business. So in periods where you have a lot of money coming in, there's not a lot of need, but think of like a landscaping business. If I didn't do snow plowing, the winter months I need money to kind of get me through the winter so that I generate the money in the summer.
Yep.
Versus I'm going to expand my business and I have an economic footprint where I can say, listen, with this money, I can add this level of scope to my work and generate this amount of additional revenue, and that revenue, net of expenses, I'll be able to easily pay back the loan. And that's where I think the story comes into where you can look at the numbers, but numbers only tell so much of the story.
Yep.
So that's where you come in and say, this is what they're doing with the company today, and they've hit this wall, and now with this additional funding, they'll be able to break through the wall and continue their growth pattern.
Yeah, absolutely. Yeah. And we see that a lot. I mean, businesses, even mature businesses, go through various evolutions. And so it's just really important for us to understand the story, ask the right questions, and try to get behind what it is the business is trying to accomplish to see what's the best way for us to help them do that.
Okay. One thing I do want you to add some clarity, because I always get this, why do I have to sign personally for the loan? Why doesn't the business, and we could talk about the difference between real estate and then like, a business, because they both act as a form of collateral. And they say, well, you're collateralizing my business. Why, even the land, why do you make me have to sign personally? So maybe you can explain why this is really a common theme, especially after post-Great Recession, which already is 15 years old, but it's still pretty much a guarantee that everyone's going to have to sign personally. So maybe you could, because I get that pushback all the time, because clearly as a borrower I don't want to sign personally. However, the banks, in all banks I've seen require, but maybe you can enlighten everyone so they understand why.
Yeah. Ooh, you're really coming with the tough questions, Frank.
Sorry.
No, and you did.
No hot seat here.
No,
Sorry.
that's okay. Yeah, and you did kind of answer that. I think that prior to, the Great Recession, 07, 8, 9, you did see a lot more where banks' tolerance levels were, and we call it in the banking world and banking speak, I'll say it. You say signing personally, we call it recourse or non-recourse.
Okay.
So recourse means you're signing, non-recourse means you're not signing personally.
Okay.
And that's
Thank you
just
for
because
correcting
banks love, no, you're not, it's not correcting. It's just, for our listeners, if they heard their bank say that.
Okay.
They know what the bank speakease is. We love acronyms and changing things around a little bit, but yeah, I mean, after that, I think a lot of banks got holding a lot of paper, and there were some personal resources that they could have utilized to offset some of the loan balances that they ultimately ended up writing off. And as you know, there was a lot of bank consolidation and some things, bailouts and things that happened during that time. So that really made a big adjustment to the landscape when it came to banks wanting that personal guarantee. And, the short answer is, from a bank's perspective, if you're not willing to stand behind your business, then why should the bank?
All right.
And so that's the short answer. It's there is a little bit more that comes into it, but you are correct. It's very unusual. I would say that, some banks will evaluate it and look at it. And if you have a really mature business, a very strong balance sheet, I think that's a really important aspect to consider. No bank is going to, not have you stand behind the loan if your balance sheet isn't strong. So pay attention to that, and your good cash flow and collateral. I think a bank will take a look at those instances, but it's much more far and few between than it used to be.
Yeah, well, and I try to explain to clients in a different way. It's like they don't want to be in the real estate business. They don't want to be in the tool and die business.
Yeah.
They want to be in the banking business. So the last thing they want is to be in a workout program and they're trying to deal with your organization. It's not efficient. So you hit on a really important thing I want to talk to you about. So how does someone prepare to tell your story besides the verbal, like, here's why I want you to give me the money? How do I approach the bank? Because I try to tell individuals it's kind of like a sales job. You're really trying to get, it's like Shark Tank, right? I want you to be an investor. Well, bank in a way is kind of investing and putting money at risk in your business. What are your thoughts? How should people come prepared to pitch their idea to the bank and say, listen, I need $1 million loan for this expansion?
Yeah, no, that's a really good question. And I think it goes twofold too. And I'll say this for our listeners because, we are in a great position, or, the borrowers are in a great position. There are lots of people out there that, a good, healthy business, they want to do business with them, right? So you can use that consumer hat to go out and find the right person for it. But when you're having those conversations, and, maybe you're not in a great position with your current bank, or let's say this happens, more often than not of late, you used to have a lender in place for 10 years, and now that lender is at another bank. And now you have a new lender. Or maybe that's happened to you, 3 or 4 times over the last 10 years, which is unfortunate, but we do see that. They do move around.
Attorneys move, CPAs move, financial advisors move, lenders move too. Right.
And so now you have someone that doesn't know as much about you and your business as you had before. So I think it's just important to say is use your passion to talk about your business and think about the things that sometimes, you may not always think are important to a conversation with your lender or banker. Everybody can look at the numbers and talk to the numbers, but also think about think about customer concentration. What does the makeup or the diversity, of your customers and your vendors look like? That's an important piece to it. What is your market, and where do you have any concentration specifically in your market itself? Do you have a niche that's important for someone to understand? So some of the things that you may not think about talking about when you're trying to just tell them why it's important to lend you because I make money. But thinking about some of those other things that really make your business special and help you stand out. Maybe you make a very specific product.
Right.
that, that gives you an advantage in the market comparison to your competitors. Those are the important things that you can share with your lender to help them help you.
Yeah, so I think as the business owner, they should be in a position to be able to articulate the story passionately.
Yeah.
Do you recommend having their CPA or a financial advisor, someone with financial background, to really put together the numbers aspect? Because at the end of the day, I imagine the bank's going to say, well, it's a compelling story. I mean, I'm sitting there on the edge of my seat listening, but at the end of the day, they want to know how you're going to be able to pay it back. So,
Yeah.
So do you recommend that they invest some time and some money, because you're going to have to pay someone to do it if you can't do it, especially if you're not skilled at putting together spreadsheets, but to
Right.
put together at least a well thought out, like, here's how we expect to use this money, here's how we expect it to grow, here's the net money coming from the expansion, and here's how we're going to be able to pay it back. Because I always tell clients, whether they're individual clients or businesses, cash flow is like oxygen. You could have a lot of net worth, but if you have no movement of money, you're going to choke.
Right.
So what are your thoughts on the preparation on the numbers piece? Because I imagine that they're going to ask at some point, well, okay, that's a great story, but how are you going to pay me back?
Yeah, no, that is a good question. And integrity of financial statements is really important. So I kind of want to say that before I answer the rest of the question. But you do want to make
So no
sure.
BSing.
No BSing. Yeah, there's we do ask that you give us the true tax return and not the one that you give to banks and the one that the CPA actually does. But but yeah, so the integrity of your tax returns is or your financial statements is really important. Whether or not it's just your tax returns, how you're doing, you're internally prepared, whether it's through QuickBooks or Sage, whether you're getting compilations, reviewed or audited financial statements, all of those things are really important.
Okay.
And additionally, if you have taken the time to do a little bit of projecting and you put together some projections, or maybe not even as formal as true projections, but just here's where we're at and here's where this can take us, it really does go to show the bank that you've done your homework and you're prepared to make either the acquisition or the acquisition, whether it be another business, a piece of equipment, some working capital or any of those things, acquisition of real estate, all of those things. It can be, it can behoove you to show that you are prepared to do that. So it's a good thing.
All right. So, making sure, some key points, just to recap a few things as we move on, is making sure you develop a relationship with your banker, and especially if there's a change, so that there is a relationship that you're not only calling on them once a year, that they understand what's going on in your business world, your business life. And this is assuming it's going beyond treasury, but even if you're just using the bank as a treasury function, there might be some point in the future you might need to borrow. And if you get to that point, be transparent, have a compelling story that's, accurate, like exactly what you're going to do and why you need the bank to help them. Even though you're paying for it, it's a risk, because the bank has a responsibility, all the other people that put their deposits there at the bank.
Right.
And to take some time to curate numbers that are realistic in regards to this is where we're at today, but with this money, this is what we think we're going to be able to do in the form of projections. And usually, if you're not skilled at that, if you didn't come from a background, whether in college or a finance background, where that might be more of a challenge, enlisting someone who has a financial background to help you at least put together some basic numbers, so that the bank can see the passion and the story, where they can see how the numbers are going to work and see how they're going to get paid back. Is that fair?
Yeah, that's very fair. Great
Okay.
recap.
Yeah, I'm listening. No, you're very good at telling all this stuff, so this is good. So what are your thoughts on, especially smaller businesses? I'm changing tracks a little bit, and I laugh because my mom immigrated here, and I always wondered, why does she have like CDs at 5 different banks? And part of it was this whole thing about losing money. It came from that Depression era. But from a business standpoint, I've seen the same thing. Some businesses have multiple banks, and I always question how do they see that as being helpful? Where I'd rather, I have no problem saying all our banking we do is with your organization.
Right.
So I feel like we become more important to the organization. But what are your thoughts on, picking the right bank size. Like there's some really large banks out there, and I feel I would just be a number where I feel like when I deal with Westfield, I feel like I matter. So what are your thoughts on picking a bank, consolidating and working with one bank, things that they should be looking for in choosing a bank? Maybe you can shed some light on that.
Now, another very good question.
I came prepared.
You did come very prepared, and and that's a multi-layer question and answer
I'll let you
too.
deconstruct it.
Yeah, I will try to deconstruct it the best that I can. So, so just to kind of touch on the banking side of things when it comes to evaluating a bank and looking to a bank and figuring out who might be the right partner for you. That is a big question. So, because you're right, and one of the great things about being a consumer in this environment is, I think in the state of Ohio, there's over 250 banks just here alone, and that's not including all of the banks throughout the region and in other states. So, so you have the power and the ability to evaluate, and you're right. I mean, I think that what comes into play is, sometimes the size of the bank versus the size of your business. And the great thing too is, and I always say this, Westfield as a bank and other community banks like us, we're not always the right fit for everyone. And so there are, needs, and we have legal limits that we can go up to. So some of those larger middle market banks are better served by those larger institutions that can support their growth and give them the things that they need. But on the flip side of that, we do work with several, middle market companies and lower middle market companies.
Define what that might be as a middle market to the best you can.
So I would say, when you're looking lower middle market, you're looking between probably 10 and 50 million in revenue size. And then, going 50 to a couple $100 million starts to move you into that middle market space and kind of everywhere in between. So when you're looking at lower middle market, that's a great fit for some community banks. Not all. It depends on, what your needs are and things like that. And then as you get into middle market, you sometimes are outgrowing the community banks as much as you want to be a part of their organization. And at that point, sometimes you have to participate out, or you just have to make the decision to start working with an organization. But, there are banks that, like us, we're at that 2.2 billion and we can lend up to about 25 million, which is a lot of money, right?
Right. That should cover a lot of people.
It should cover a lot of people, right?
Yeah.
And then you've got some of your kind of regional banks that aren't quite as big as the Chases and Keys and PNCs of the world. You've got your smaller, like your FNBs and S&T Bank and things like that. And they can handle a little bit more, and they're not quite there. So there's something for everyone, but you just have to evaluate and figure out, what makes the most sense for your business and where you're at. And then you have to have the right conversation with them to understand, what's going to be important for them, how, and find out if that person, can really translate back to you what's important about your business, and you get the sense that they're going to be able to advocate for you and do all of that for you as you're evaluating and you're looking for that person.
Yeah. Well, and for me personally, obviously having the basic banking functions and lending functions was really important. But as our firm, we really tout our client touches. I feel the primary reason why we went to your bank is the client touches. You guys are, gals too, are reaching out, making sure where we're at, checking in on us. When I call, I get, very fast turnaround. I have people calling me, and it's the same people. So I'm not being routed through a 1-800 number. So that was my frustration when we were dealing with a larger bank. So for me, convenience and expediency in regards to communication was really important, and that's something I valued, and I still value in our relationship, so I appreciate that.
Yeah, no, and thank you for that. And just on a side note, I think that, community banks have always had, kind of a good feeling out in the marketplace, but I feel that we really differentiated ourselves during the pandemic and when PPP was rolled out, as hard as those 3 letters are for me to say now, after the hours and hours locked at a desk. But community banks really stepped up during that time, and so many of us went old school. We went very paper forward, and it was an all hands on, especially, I can speak specifically to our bank. It was all hands on deck. I mean, normally the system that these loans get entered into, we only have a couple people at the bank that had access to that system.
Right.
And, within 3 days, there were 50 of us that had access to it. And then, the phone calls, and we were just taking applications, processing them ourselves. And, some of the larger institutions took a very electronic approach, which, trying to put something that out, no offense against them. They were just trying to do what, they felt was right at the time. But those systems, kind of had a lot of bugs. And so we really stood out in that situation.
Oh, yeah. Well, I could tell because I have other clients that work with your bank, and they were getting PPP loans faster, and others were waiting months to get their money approved, and they really needed it because at that time, in fairness to whatever decisions were made by our government, we had no idea what the black hole was going to be like.
Right.
And, with everything being forced and shut down, people were like, hey, I need some lifeblood,
right.
To make sure that, I can provide, I don't have to lay people off, things like that, because it became certain industries became more challenging, than others, especially when you're, I call it driving into the fog. You didn't know when it was going to clear, and that's really what was happening during that time.
Yeah, there's a lot of uncertainty. And so, and then just to follow up on the other part of your question about having all your eggs in one basket or not, I do think that that's an important question, and there are a couple of answers to that. And from a banking perspective, and I'm sure our listeners, if they're business owners, have experienced this, or somebody at their bank has told them this, the banks really want the full relationship,
Sure.
and they typically reward based on having that full relationship. And so you hear that a lot. Most banks, not all though, there are definitely banks out there that are very transaction based.
Correct.
So, that's something that you need to know and understand as you're having those conversations too. Are they a relationship based bank? Or are they a transactional based bank? And, and I say that somewhat tongue in cheek because there have been situations where business owners had all their eggs in one basket, and then that bank, for whatever reason that they had, but when you're beholden to a lot of shareholders, sometimes your appetite in a particular industry can change really quick, and they can pull the rug out from under you, and now you're looking somewhere else. And someone who might have already had a relationship at another financial institution can pivot a little bit quicker than maybe someone that didn't. So, it's really a very loaded answer and question. And again, it really depends on, the comfort level that you have with your institution and how you do your business and the complexity of your business. So I know that's not like a great answer, but it's a very real and true one.
You bring up two important things. The one I'll deal with real quick is that I do recommend clients, they base everything off the interest rate, right? Mm-hmm. And so, I got a better rate here. I go, but, did you read the fine print?
Right.
Because, and if you don't know, you should have an attorney review it because, first of all, there's not just the interest rate you're paying. There's all these other fees that could be part of this loan. Mm-hmm. The other thing you got to look at is the covenants and all the things that are in a loan document that could put you at risk where, loans can get called easier at one bank versus another. Right. And you need to understand the potential business risks that you have as a borrower. So making sure that you're not just getting the loan and, hey, I'm happy with the interest rate. Make sure you understand all the terms that go with it and, have the banker, the loan officer explain it. But I would always recommend anytime, because it's a legal document.
Yeah.
You have attorneys, as a loan officer, you don't draft your loan document, right? You have the attorneys for the bank.
Yeah.
I would have my clients look at it and say, please understand, everyone's happy when things go fine.
Yep.
It's when things go off the rails that, things blow up. And so I always, tell my clients in any situation, if you can live with the bad, then that's good.
Right.
If you can't live with it, then you got to figure out how to negotiate, because I'm sure there's a certain level of negotiation that every client has to some degree, I would imagine.
Yeah, you bring up something that is really important, and my background, just for our listeners, is the first 18 years of my career was in a large super regional bank, and two different banks, but 15 of it was primarily at one before I transitioned into community banking. And and you say that, and this is an important question, I think, that business owners don't necessarily always ask when they're having a conversation with a potential new banking partner, and that is, what happens when I have a bad year?
Correct.
What does it look like? And and that is an important question, because every bank is a little bit different about how they handle that. And just for the same reason that we look at historical financials, past is a great indicator of what's going to happen in the future. For instance, some banks you have that bad year, they may just look at you and say it's time to leave. And that's a very difficult position to be in, because you're probably not in a financial position to be able to go somewhere else and do that. So what are you going to do in that scenario?
Right.
Where, someone like a Westfield Bank, or potentially another community bank, is probably going to ride that wave with you. If you have a situation and they believe in you, you're being transparent with them. I think that's another important thing. Don't wait for the tax returns to show up to the banker and them notice things are going bad. If you're transparent, your communication is really good with your bank, and they understand that something's coming, they're more apt to work with you and to ride out that journey with you until either you can, you're back to normal, or, in the worst case scenario, the business isn't able to dig itself out. You have to look at other alternatives.
Yeah. Well, I mean, again, speaking from personal experience, we send you our financials and our tax return every year, because we're looking at some point maybe to do an ESOP or to buy another company, and I don't want to have to re-educate you on our firm. So by giving you this information, we're being transparent. Like, here's our years, here's our expenses changing year over year, and we can talk about why our expenses are up this year, because we're in a growth mode and we're spending money on hiring people. So that's why in the last 3 years, we've gone from 6 to almost 14 people here. So there's always a story, hopefully, behind the numbers, and banks are businesses, so they do understand. But I think just again, recap a couple key things. I think interviewing several banks and finding a bank that fits your needs are important. And two, I think every bank wants to have all your business, and that's a good thing, because in our business we're the same way. We call it share a wallet. We want to make sure we're managing everything, because we think we actually provide better service because we're involved in everything. When we only have some of the information or part of our clients' finances, then we never know everything clearly. Law firms are no different. CPAs are no different. It doesn't make sense to have 3 CPA firms. Why would you have 3 banks? Why would you have 3 law firms, unless you have a certain specialization that the law firm doesn't have? But you do outgrow. I mean, we have a big bandwidth of services like your firm. So a solo investment advisor or financial planner does not have our capability, because we have a bigger bench. It happens in CPA firms and law firms. Your friend who you went to college with, who's a really good attorney, he doesn't now you start out when it was just you and yourself. Now you have 100 employees and you have all kinds of legal responsibilities in all different areas. He or she can't be a specialist in all those areas of law. So it does make sense that you interview, you're transparent, you understand what needs are, can that bank meet them. And so I think all those points you've raised are really, really important. So and you have to decide what matters most. And like I said, our biggest hot button was to be able to have a bank that was flexible with our needs, and was good at the communication side, and was really able to know us and we know them, because while we're a big independent, as a firm, we're not a big company. We have 14 employees total. And so, to a big bank, and I don't want to name any of the big banks, so I don't want it to sound disparaging, but we would be a dot on their, many decimal places to the right of their number. So I don't want to have to feel like that.
And those are all the questions that, that a business owner has to evaluate as they're looking, is your main point of contact a branch, or is it, an actual person? And I think some of the other things to consider when you're evaluating the banks, and this is something that, again, I can speak very personally to, is, at my previous life, I was basically calling the same 1-800 number that our customers were calling to get the answers. And thankfully I had, longevity, and I'd been there long enough that when I got the wrong answer, I knew it, and I would just hang up and call back and ask for the right answer. But, here we're a organization of a couple hundred employees, so we likely know the person who can fix the problem.
Okay.
And that can be a lot speedier for our customers, and other organizations that might be in similar situations like us. And, and everybody wants great service, right? And all of us are
Right.
capable of providing great service, but you have to know and understand what great service means to you, and ask the questions to understand who are you answering to when you have a problem, who are you calling, who's solving your problem,
Right.
Who's answering the phone, and all of those things. So it's a lot to to examine and to pick up. And I will say too, the one thing, and I think this is important, because most business owners that are listening to this, there are a lot of situations where they're providing a product, and depending on their business model, they may not be the low cost provider, right? They're providing a service, and it's no different as you're evaluating banks.
Right.
The bank that you like the most may not have the best rate.
Not
right?
in every facet, yeah. Everyone.
And it, across the board, right? There's a lot of things to consider in that, and it's very much similarly to you. Who's going to be there for you when you need them most? And it may not be the bank that's willing to cut all their fees and cut all their pricing just to win a deal, because you just don't know what that's going to look like down the road.
Yeah, all the economics have to make sense for both sides. And again, I go back to, it's not more than the interest rate, it's all the hidden fees and the other service costs that could be there. So you got to look at the totality, of the relationship. I will say, and I hope I don't get in trouble for this, like many of you, like yourself, I have cell numbers, and I never abuse it. I know my clients, they all have my cell number. We have a normal number to call in. I have, my extension is 222 if you call in the main number, but all my clients have my cell number. So,
Yep.
If it's urgent, if it's really an emergency, I want to be there for them. And again, no one abuses it. So it's not like, oh God, I got to go change my cell number because everyone's calling me at 10 o'clock at night. It rarely happens.
Yeah.
It's just the convenience of being able to get to someone, and again, and our rule at our firm is we try to get back to everyone within 24 hours of a call.
Mm-hmm.
At least let you know, hey, I got your question. It might take me 48 hours to get an answer, because not everything I can solve directly. I might have to go
Right.
someplace and find out the answer, right? So I think I've always appreciated that aspect. I don't think I abuse it. I don't think anyone at our firms abuse it. It's like, when you need someone, you get a hold of someone, and you're not passed around again in a call center. And then I got to make sure I write down every person I talk to, because in case there's a problem, I got to say, well, this person told me this.
Yeah.
And I don't have that issue. So that's again something I value in a relationship, with Westfield. So
Right. Yeah.
um,
Thank you.
No, you're welcome. You earned it. Hey, two last things. One, I'll give you the two questions. You can do them in whatever order. So just any trends in commercial banking that you see happening. And the reason why I'm asking that is now that the election, thank God, is over, and it wasn't close, so there's none of the rioting and craziness going on.
Yeah.
Do you see, there's talk, with President Trump that he's going to make, quote, business easier for business owners. So do you see that as part of the trend in banking? Do you see any things that are talked about that could change from a lending standpoint?
Yeah, that's a good question, and I
That
would
might be
say,
early, but I just wanted to ask.
yeah, it's a little early, but just historically, a Republican-run administration is a little more friendly on a regulatory standpoint. So I think the banks are, looking forward to the potential for some regulatory relief or some potential changes. So you could see things, maybe getting a little bit easier when it comes to some of the hoops that we ask people to jump through, but it is a little early to tell. And, I think one thing that is on the horizon that's being talked about, I think there's two big things that from a commercial perspective that are big hot buttons out there, and maybe some of our listeners have seen articles or things on LinkedIn about it. And one is everybody's talking about the silver tsunami when it comes to acquisitions and business ownership. And so a majority of the businesses in the United States are owned by people over the age of 60. And so we have an aging, nobody in this room though.
Yeah. No, not technically.
Close. No. So, there's going to be a lot of transition happening. There are a lot of private equity and a lot of people that are out there looking for transitional business ownership.
Right.
And so there's a lot of that going on. There's a lot of conversation about that. You're seeing a lot of M&A discussion.
Okay.
And then the other one is on top of that, and it'll be really interesting to see how the rate trends may adjust this a little bit, or an administration may adjust this. But back 5 years ago when rates were really low, a lot of people went out and acquired investment real estate and properties, and a lot of office buildings now that are not fully leased, and those are coming up for renewal.
Yeah, that's right. Typically it's a 5 or 7 year rate lock.
Yeah, that's correct. So a lot of those are coming up for renewal over the next several years, and there's a lot of concern within the financial industry about whether or not they're going to be able to renew those loans, or going to have to take possession of them because there's not enough leaseholders and people that are in these buildings to support the cash flow of a higher payment once the new rates kick in. So, some of these people were really able to lock in the high 3s and low 4s. And now the average rate is in the 7s. And so that's a big difference in a payment, especially if they were already tight to begin with.
Yeah.
So the banks are bracing for the potential of
this is
the
more
write-offs.
in traditional office space, correct?
Yeah, it is a little bit more traditional office space, because a lot of the other industries or investment real estate, i.e. Multifamily, single ownership, owner-occupied, they're not as sensitive to that.
Yeah, even warehousing, we're seeing warehousing is like a very good investment right now because there's not enough warehousing space to go around.
Yeah,
so,
industrial still going strong. Mm-hmm.
Right.
Yeah, even conversions into industrial from non-traditional real estate, like what happened in Chapel Hill with ICP. They converted Chapel Hill Mall into an industrial park, and they're fully leased up now. So you're starting to see some things like that. But the office space is a big concern for a lot of the banks that are out there. So it's definitely a trend to keep an eye on because, how much they may be impacted by that's going to drive their ability to lend out in the future.
Wow. Well, great. Anything else you want to add before we close up shop?
You asked me some really tough questions today, Frank, so I appreciate it. And,
I knew it could set the bar high, and you have no problem getting over it.
Well, we'll see what the listeners have to say. But no, I just really want to thank you for not only having me on this podcast and having a really fun and good discussion, but for also being a great customer of the bank.
Thank you.
I love working with you just as much.
Well, I appreciate it. Well, why don't you give everyone your contact information so that way if any of our listeners have a banking need, both personally or commercially, they know how to get a hold of you easy.
Yeah, so Carrie Malotte, and I will spell that out for you. It's Carrie, last name M as in Mary, ALOT as in Tom, T as in Tom, E. My cell number, as Frank so aptly described, is the primary source of communication nowadays, and that number is 330-607-3210, and you can reach me by email through my first and last name at westfield-bank.com.
Well, a heartfelt thank you, Carrie, for being on and adding so much to our listenership. I want to say viewership, but I'm more into this TV thing. But thank you for being here, shedding a lot of clarity and how people can have what I call a very meaningful relationship with their bank and their loan officer and the people that really can help them, manage their lives from whether it's treasury work all the way to, lending and, thinking about expansion and things like that. I want to thank our listeners. Again, if you have any questions, you can reach me at 877-514-9991 at extension 222. I will give my cell number. I pressured you. 216-650-6808 or Frank at returnonlifewealth.com. Thank you for listening. Please spread the word. We appreciate getting more subscribers to our podcast. Most importantly, grateful for everyone who listens. Health and happiness this holiday season, extending into 2025. Enjoy the special time of year with your family. Make some great memories, and we'll catch up with you in January of 2025. Thank you again.
This has been Frank Wealth Insights, the financial and investment podcast from Return on Life Wealth Partners. Your life, your money, your way. Experience financial planning the way it should be, not the way they want it. See how at returnonlifewealth.com.
The opinions and views expressed in this podcast may not necessarily reflect the views of Plan Financial Services, DBA, Return on Life Wealth Partners, or its affiliates. This podcast should not be copied, distributed, published, or reproduced in whole or in part, or disclosed by any recipient to any other person without the express written consent of Return on Life Wealth Partners. Each name of a guest or a third-party organization mentioned in this podcast is the property of the company to which it relates, is used here strictly for informational and identification purposes only, and is not used to imply any ownership or license rights between any such company and Return on Life Wealth Partners. Return on Life Wealth Partners is not affiliated with its guest, nor does it provide compensation for such guest appearance. The content of this podcast does not constitute a recommendation from any Return on Life Wealth Partners entity to the recipient and is provided for informational purposes only. Return on Life Wealth Partners is not providing any financial, economic, legal, investment, accounting, or tax advice through this podcast or to its recipient.
This information is not intended to be a substitute for specific individualized tax advice. We suggest that you discuss your specific tax situation with a qualified tax advisor. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. This communication expresses the views and opinions of the participants as of the date it was recorded or indicated, and such views are subject to change without notice. This podcast is being made available for educational purposes only and should not be confused for any other purpose. The information contained herein does not constitute and should not be construed as an offering of advisory services or an offer to sell or solicitation to buy any securities or related financial instruments in any jurisdiction. This podcast may discuss forward-looking statements that are based on then current beliefs of the participants. Investment advice offered through Planned Financial Services, a registered investment